What's going on, guys, and welcome back to another video. So today we're going to discuss an ETF that I believe has a lot of potential in the long term in the form of the iShares Global Clean Energy ETF, ticker symbol INRG or ICLN. So I've already made a number of detailed videos on this ETF, so today I just want to give updates on my current holdings in this ETF, the current charts and how it's performing. We'll have a look at those very briefly. We'll also have a look at their constituents if there's been any changes. We'll have a look at some important news in terms of some of their controversy around their top holdings. And finally, we'll discuss my plans going forward for this ETF. And with all that being said, let's get right on into today's video. So at the moment, the iShares Global Clean Energy ETF makes up one of the 31 holdings within my overall portfolio. We can see on the left here we have about 8,670 euro invested, up about €1,275 or 17.2%. Now ironically, the iShares ETF is one of 3 out of the 31 overall holdings that are in the red, and the main premise of this overall investing channel is the dollar cost average, so that is definitely one I've been focusing on over the last few weeks. So let's have a look at how my position is doing at the moment. So now we can see on screen my energy sector pie is currently up 8.1% overall. Now we can see iShares Global Clean Energy is down about 9.5%, which isn't for good viewing, I suppose, but it poses great opportunities to take advantage long term in my opinion. Now the other two stocks, the Chevron and ExxonMobil, the two old school energy style stocks which I have for hedging against this clean energy, are doing very well at the moment. For example, Chevron is up over 40% and we can see ExxonMobil is up over 62.5%. We can see on the 3-month chart that it's currently trading at about £9.55. Now I bought the ETF on the London Stock Exchange, hence why it's in pounds. We currently have about 31 or 30 shares overall within this ETF, and we can see the dotted line here is my overall average price within this holding at about £10.50. If you were to base your investing off this 3-month chart, it doesn't look for good reading. It's down about 29% over the last 3 months. But again, as we'll see in a few seconds, you have to look at the longer term charts, at least the 1-year chart if you're a long-term investor. Now you have to realize as well that a few months ago, the clean energy sector overall, not just this ETF, was doing very well in terms of it had a lot of praise, and especially once Biden became the next president of the US, it really did soar. But obviously once the kind of big news and hype dies down, so does the stock prices, and that happens in all different aspects. So it does have to consolidate, and we can see that as a prime example right here. So we can even see from the 1-year chart here that it's up nearly 96% since this time last year. So it looks for a lot better reading, although it has come down a fair bit from its highs of about £13 or £14 a share. But again, long term, this gives ample opportunity to dollar cost average, and if you're a long-term investor, this is discount prices in my opinion. Now the reason why I hold an ETF within this sector is because it's still in its infant stage in my opinion. There's a lot of different subsectors within clean energy as well, such as hydro, wind, etc. So you really do need to have your fingers in all baskets to be fully diversified within the sector. So I think an ETF is a brilliant way to do so. Even though the top holding in this overall ETF is doing very poorly at the moment, now we'll go into that in a few seconds. There's currently about 30 stocks overall within this constituent. So again, this is great for diversification because you kind of get a feel for all different aspects within this sector. So now let's look at the top holdings and we'll have a discussion about Plug Power. So just some key portfolio characteristics before we get into their holdings. They have over 385 million shares outstanding. They have a distribution yield of 54 pence per share / ETF. And finally, there's currently 36 holdings within this ETF. Probably the main reason why I like this ETF is again diversification, which is one of the main reasons for ETFs in the first place, I guess. But besides having all the subsectors within this clean energy sector, they also have exposure around the globe, which is very important in my opinion. For example, literally the majority of my single stocks are all within the US, so it's good to have a bit of exposure around the globe as well. We can see here that about 33% or 33.3% of the overall holdings within this ETF are in the US. We then have like the Chinese market and then some European countries in the form of Denmark, Spain, etc. And then we also have New Zealand, Canada, Austria, to name but a few. On screen now we can see some of their top holdings. Again, just like the global exposure, we can see the sectors here such as industrials, IT, utilities, etc., which is great for diversification. Their top holding at the moment is still Plug Power. Now there's been a lot of controversy around Plug Power, which we'll discuss in a few seconds, but it's currently 7.1% of the overall weighting in this ETF. Now as you can imagine, if your top holding within a 30 stock ETF is doing very poorly, it's obviously going to affect your overall ETF as well. So that's another main reason why this overall ETF is in the red at the moment. Now, such examples as Plug Power shows the importance of holding an array of different stocks within a sector and to be diversified, because let's say if you had all of your capital in Plug Power, you wouldn't be doing too well at the moment. So that's probably the main benefit of having an ETF, is that if one stock is down, another will help it back up. Now, Plug Power hasn't been doing great as of late at all. This has kind of all stemmed from accounting errors on their part, which really did plummet their overall stock price. Even in the last few days, it's gone down about 10% or so, basically based off Morgan Stanley's reports. Certainly worth noting that even though Plug Power is doing very poorly of late, it's still up over 600% since this time last year. So if you're there since last year, you're definitely after making a lot of money. But saying that, if you look at the 3-month chart here, it was up at about $76 a share, and it's after going down over 55% in the last 3 months, which is absolutely catastrophic, even for accounting errors. So again, as you can imagine, even though the overall ETF for iShares is down about 8 or 9% at the moment, you have to imagine that even though that is down 9%, the top holding is down 55%. So again, the other holdings within this ETF are doing quite well at the moment. We then have other analysts saying to avoid Plug Power at all costs, and again, you can't really argue with that at all. If I was in charge of the iShares ETF, again, obviously I'm not, but if I was, I would be considering moving Plug Power way down the list or even off the chart completely of this 30 stock ETF. Now again, you can say that long term it might bounce back, but again, for a stock that's doing so poorly at the moment, I wouldn't have it as my top constituent. Again, you can even shave off a good few percent of this and even keep it in the top 30, but certainly not in top position. So that kind of leads it nicely to where I'm going with this ETF going forward. Now at the moment, as I said, we have about 30 or 31 shares at the moment. I'm doing about 8 or 9%. Usually I would dollar cost average straight away, but I have been doing that already over the last 2 or 3 months, and it's still in the red. So what I'm going to do is obviously keep onto my 30 or 31 stocks at the moment and leave and give it some breathing space for a few weeks, as sometimes it's not the best day either to kind of continually drip feed money in if it's in the red. You should always kind of give it a few days or even weeks breathing space. So that's going to be my plan going forward. I have 2 other stocks as well that are in the red out of the 31 in the form of Tesla and High Tide, so I will be focusing a bit more on those over the next few weeks. And again, I'll always be keeping an eye on iShares Global Clean Energy to see how it's performing. So it's a win-win really if you leave it a few weeks. If it goes back up in price, well and good, you got your money back and you're back in the green, which is great. But if it goes the opposite way and plummets even more, that just gives you a greater chance to buy more at a very cheaper price, which would effectively drop your overall average cost and give you a better profit long term. So that's it for today's video. I just want to give an update on the iShares Global Clean Energy ETF, ticker symbol INRG or ICLN, depending which one you're invested in. We had a look at my current holding within this ETF. We had a look at their stock prices and seeing how it's actually performing. We had a look at their updated holdings and discussed the Plug Power problems within this ETF. If you found this video anyway interesting or entertaining, it'd be much appreciated as always if you're new around here, if you consider subscribing to the channel. And if you could smash that like button, it'd really be appreciated as well, as would help me and the channel out going forward. And finally, I'd be very interested to see if you hold this ETF in the comment section below and your reasoning behind it. Thanks very much, enjoy your Tuesday, and I will see you all in tomorrow's video.